This is the briefing for Friday, October 31st. Well, not a whole lot happened in today's trading. We had basically a day of rotation even after Apple and Amazon's earnings came out. So it's going to be interesting to see how we resolve this. Now, as I've been talking about for the past 2 weeks or so, the internals of the market are still showing much weakness, but it appears that the retail buyers really want to see this market go higher. You can see the rotational pattern. This is the last 2 days of trading that we had, Thursday and Friday's trading. Wednesday, we got this move down, which was after the Fed announcement and the press conference. So that we've kind of found a stopping point, and really we closed this gap in the spiders, and then we have support now coming in right around the 680 area in the spiders. And resistance is going to come in right around the 685.75 area. That's a breakout of this area of consolidation. That's going to give us, breaking to the upside is going to give us a test of this all-time high. Breaking to the downside is going to open up trading down to about 675, where the beginning of this gap is. Now keep in mind that a gap is convictive buying. It's a bunch of volume that came in right at the open and price gapped up higher. So if these buyers do not defend this price, that means we're going to probably see this gap closed and then potentially lower prices. But for right now, everything is being held up. The same thing with the Qs. You can see the rotational pattern for the last 2 days of trading. High of 635 is upside resistance, and then a break of about the 626 area. That's going to open up about down to the 623 area. Where this convictive buying gap occurred. If that's broken, that we might see some slowing of the market down into this area until we get about halfway through the gap, and then it should be closed, and then that would open up support at the 615 area. And then in the Russell, a little bit completely different. A little bit of rotational pattern here. This was the Fed announcement day, and then of course we got a breakout of this right below this 248 area. Retested the breakout, and then of course another move back to the downside. So it's going to be interesting to see what happens here with the Russell. Russell is showing much more weakness than the other two indices. NASDAQ showing a little more strength than the S&P 500. So the intermarket divergence that we're seeing, it's going to be very interesting to see how that is reconciled. Now, going to the internals, I want to talk about them on a daily basis. So you can see here, this is breadth in the NYSE. So you can see the trend of breadth is down, and even more recently, even though we had two spikes higher on two different days of market breadth, you can see the trend is down once again. 52-week highs minus 52-week lows, negative today, 95 shares. That was pretty close to what it was yesterday. So you can see that the trend of stocks above their or below their 52-week moving highs is getting weaker as each day progresses as well. In the Qs, we're looking at the same thing. This is NASDAQ breadth. You can see the breadth is declining. A couple days here where we had breadth expand above trend, but it's back in its decline once again as well. And of course, in the Russell, we have this decline in market breadth. Pretty big area of rotation right through here. I've got this resistance or the upper extreme set at 250. We had a breakout there, breakout here, attempted breakout here, a breakout there, and a breakout there. So it might be actually that resistance may be up to probably about the 252 area as opposed to the 250 area as well. Looking at where we are in terms of overbought and oversold, we're basically neutral. And you can see that we came from basically an almost oversold condition in the NASDAQ to neutral, and the NYSE is still has been neutral for probably the last 3 to 4 days, trading days, since the beginning of the week. Now, most important is what's happening with volume. You can see we had a spike in volume in the NYSE in today's trading. But net volume, you can see the trend is down. Few spikes on a couple days, just like in bread. But you can see the trend in net volume is down, suggesting there is more selling volume that's coming into the market as opposed to buying volume. But the real crux of the matter is what's happening with NASDAQ volume. This is total NASDAQ volume. And you can see the trend in volume in the NASDAQ is higher, but the trend in net volume is lower. A couple little spikes above trend, but for all intents and purposes, the trend in volume is, or net volume is lower, not higher. If we were seeing this type of move in volume and price was moving higher and net volume was moving higher, that would suggest that it is a strong and strengthening market, the type that would typically suggest that the trend is not over and that we're going to see a continuation of the move higher. Now, right now there's no selling pressure in the market. In fact, we get some down moves or some gaps down in the morning, and the buy the dip guys step in and buy the dip and drive it higher. And that's going to probably continue until one day, assuming the internals stay as weak as they are, we'll get a move to the downside. The dip buyers will step in, and then all of a sudden more selling will come in, and they'll get run over. They're going to have to sell then, and that's typically when we get a pretty good move to the downside. Now, when I talk about a move to the downside, I'm not really talking about a change in trend. I'm talking about a greater degree time and price counter trend rotation. So if we look at where we are in terms of, this is the cues on a weekly basis. So you can see that we have a run, a pause, run, pause, run, pause, run, and then a greater degree time and price pause because it took out the previous higher low, took out this previous higher low, and then of course the trend continued on. So it's going to be important to see what type of counter trend rotation we get. Looking at it back on a daily basis, you can see the run, pause, run, pause, run, pause, and then potentially we'll get another greater degree time and price counter trend rotation, which actually opens up some tremendous buying opportunities for us to look at. So looking at one more aspect of the market internals, looking at the percentage of stocks above the 20-day moving average in the S&P 500, you can see the trend is down. Percentage of stocks above the 50-day moving average, the trend is down. So it's pretty easy to determine that the market is not strengthening internally as more and more people, more and more stocks are beginning to trade below their 20 and 50-day moving averages as opposed to above those 20 and 50-day moving averages. In the NASDAQ, we got the same situation. You can see trend is down. Percentage of stocks above the 50-day moving average is down. And then, of course, in the Russell, it's even more exacerbated. You can see here coming back into trend right there. And then, of course, this is the percentage of stocks above the 50-day moving average. So really, the internals of the market, as I've shown, are really not very strong in terms of price development. We get these gaps each day, and the market wants to move higher. But with each of these gaps and these moves higher, the internals seem to be weakening more and more. Now, that can change, and the internals can strengthen to support price. Typically, it's done around a news event. But on the other hand, if there's a negative news event that the market interprets negatively, we could see a fairly good correction to this market, which could be healthy for the rally. Have a great weekend. I'll pick this back up again on Monday.